Today we're talking about interest rates and home mortgages. What are interest rates like right now? How did we get in this mess? How are rates affecting today's housing market? When are rates going down? And then if you're in the market, what are some tactics or tips that you can use to get into that home more affordably? Hi, I'm Lorene Hetherington with hetheringtonteam.com and Parks Realty. I'm fortunate enough to lead a team of luxury agents here in Nashville, Tennessee. So interest rates are not just affecting people buying and selling homes here in Nashville, but it's really something that everybody across the United States is really talking about. So today we're going to do a deep dive into interest rates and buying and selling homes. If you are new here, thank you for joining us. This is primarily a real estate channel based in Nashville, Tennessee. Be sure to hit the subscribe button so you don't miss fresh content every single week. We're all about, of course, helping you buy a house, get a fresh start, and live your best life yet. Okay, let's get started on interest rates. Where are interest rates at right now? Today, again, this is mid-September 2023, your average 30-year conventional mortgage, which most people use a 30-year conventional mortgage to get a loan, that interest rate is hovering between 7.25% to 7.5%. According to the New York Times, mortgage rates are running at a 22-year high, making housing affordability really tough in a market that was already hit and slammed by high real estate home prices in general. Number two, why are rates so high? So why are rates so high? Interest rates are high right now because it's the government's way of trying to curb inflation. So that's their way of trying to get this razor-hot economy under control and get prices under control. So the feds keep raising interest rates until the economy cools. How are rates affecting the real estate market? Interestingly enough, we have so many clients that are quiet quitting. What that means is they've just decided to quietly exit the housing market and park their car until rates go down. That's a little bit of a tricky climb there because according to Zillow, the average home price in the United States will go up 6.5% every year, even this year in this dogfight of higher interest rates. So being a quiet quitter can be a little dangerous because while you're parking your car and not buying a house, those rates, the prices of homes in these great markets just keeps inching up. Another thing that we're seeing with rising rates is buyers that are in the market and in it to actually buy a house are having to just lower their price point. Maybe before they were looking at $650,000 to $700,000. Now they're backing their price point of their house down just because of affordability. The higher rates are just making it tough for them to afford the mortgage. So buyers are having to, again, lower their expectation and often lower the price of homes that they want to get into. Another effect of the higher interest rates is a shortage of houses. We have this entire wave of move-up buyers. Let's just say they're living in a house for 5 years. They have a golden retriever and 1 kid. Well, they've had 2 more kids and have another dog, and they're no longer fitting into the house they're living in, but they are not moving up because they're sitting on 3% interest rates right now. And for them to move up, it's really hard for them to afford the next house. So that combined with just sellers being nervous about the market, we have a continued shortage of great houses on the market today. When are rates going down? Well, a lot of our top economists here in the United States believe that the mortgage rates will continue to hover at that 6.5 to 7.5 at least through the end of the year of 2023. So they're going to stay in that range of where they're at right now for the next couple of months. But what is more important is when things do start to improve with interest rates, we are not going to see 3% interest rates for the foreseeable future. It could be years before that golden 3% rate comes back down. What we're probably more likely going to see is some improvement in the interest rates, meaning I think that by the time we turn into 2024, we're going to start to see better rates. So better rates are on the horizon, and a lot of people think that the dams are going to break a little bit in 2024, but how much? Well, that depends who you talk to. How much will rates go down? That really depends on what economist that you listen to. The National Association of Realtors is being very cautiously optimistic on rates for 2024. They are stating that rates will be 6% next year. So again, now they're at that 7.25 to 7.5. They believe we will hit 6% in 2024. Just depends on what month. So what are some tactics you can use if you are a buyer and you're in it to win it and you want to buy a house in the next 6 months? First and foremost, I would really get with a great lender and a great agent and then start really watching the homes in your targeted area. If you start to see a home that you love and it's priced really well, go ahead and go in there and make an offer and ask the seller to pay your closing costs. And more importantly, you can also ask that seller to pay for a rate buy down. How much is a rate buy down? A buy down is really 1% to 2% of your loan amount. So let's just say you're buying a $700,000 house and you're financing $600,000. So your loan loan is $600,000. You will want to go back to the seller and ask them to pay $6,000 to $12,000 of closing costs when you close, so you can buy down your interest rate to make that home a little bit more affordable. Other things that can help: put down a sizable down payment. And I know this is tough in today's market because homes are already more expensive, but get a loan from your family, get a gift from your family to try to put, if you can, 20% up on a house. The more money you put down on a house, the more attractive your lender terms are going to be, and the more affordable that house is going to be. And last but not least, make sure your credit score looks stellar. We often say in this market that buyers get the interest rate that they deserve and that they have earned. So make sure that your credit score is really high, because if you have a great credit score, lots of banks are going to want to do business with you and give you more attractive terms, because banks love people who pay them back. So make sure your credit score is hot spot on and you have it as high as possible, because again, you can go and negotiate better terms with your lender. So there you have it. Here's a recap on where interest rates are at and where they are going. We can't thank you enough for joining us today. My name is Lorene Hetherington. I lead a team of luxury agents here in the Nashville, Tennessee area. So if you know of a company that is moving to town and needs help relocating their employees, or if you have a friend or a relative thinking about moving to Music City, we'd be so honored to hop on a call with them and tell them a little bit about the area and set up a time for them to tour homes when they get to Nashville, so we can get into these great neighborhoods and then show them our wonderful homes for sale. We are all about helping you buy a house, get a fresh start, and live your best life yet. We'll see you next week.